Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Tuesday, February the 12th, 2008. Headlines out of Switzerland this morning read, Euro still under pressure on views that ECB will have to cut interest rates. The yen rose broadly on Monday as investors grew more risk adverse, while the euro gave back small gains against the dollar as the market weighed inflation remarks from monetary policymakers. The euro is coming off its worst week against the dollar in a year and a half. It had edged up overnight after the European Central Bank Governing Council member Alex Weber told a German newspaper the central bank had not relaxed its views on inflation. But it pared most of those gains in the New York trading session as fears of more credit fallout reinforced views that the ECB will have to cut interest rates this year. Yesterday, the euro-dollar was unchanged at 145.01, off the overnight high of 145.77. The euro struggled last week after the ECB left interest rates at 4% and focused its policy statement on growth risk, cutting wording about preemptive action on inflation. Weber and ECB President Jean-Claude Trichet have since tried to refocus markets on Eurozone inflation, which recently hit a 14-year high. Analysts are saying that the market is interpreting it all to mean the bank is moving into a neutral policy stance as a prelude to an eventual rate cut. The dollar-yen fell to 106.83, and the euro-yen was down at 154.91. The working group of 7 industrialized nations meeting in Tokyo offered little news for Forex markets. The finance leaders focused on the crumbling U.S. housing market and its impact on the world economic conditions and bank lending, which added to risk aversions on the margins, helping the yen. The language on currencies was largely a repeat of previous statements, with the G7 saying exchange rates should reflect economic fundamentals. The Australian dollar was among the best performing, rising to 90.35 after the central bank warned it would likely need to raise interest rates again to counter inflation. The Reserve Bank of Australia hiked rates to an 11-year peak of 7% last week, and markets now expect another hike in March. With a lack of macro drivers to give traders a push, the markets were uneventful in the Asian session. The dollar was mixed, and lower yielders seemed to have found a bottom, and commodity currencies look to continue their steady gains. The Australian NAB Business Survey suggests that the country might be approaching a soft patch as business conditions fell to 13.0. which was actually still above its historical average of 7.3. The RBA's hawkish comments should still provide the Australian dollar with near-term support. With equities still underperforming today, the ZOO index was expected to remain weak, but with recent weak consumer data suggesting that there is a significant downside risk to this release. The UK's CPI was expected to come in on the high side with pressure on both energy and food costs. This will have the markets pricing in a hawkish inflation report due on Wednesday and should keep the pound strong. The Japanese media is hinting that the opposition party is willing to endorse Deputy Governor Toshito Muto to replace the Bank of Japan's Governor Fukui, whose term ends in March. On the surface, the appointment of an insider such as Muto will represent policy continuity and should have little effect on the Forex market. In the European session, both the yen and the dollar were under pressure. The yen finally saw some action in the European session as risk appetite slowly returned. The dollar-yen broke out of its daily range, climbing quickly to 107.52. while the pound-yen reversed off of a 208 support, rallying to 209.94. Overall, the Forex markets remain passive in absence of any major economic news, and traders are focusing on the second half of the week. In a surprise move, the German ZOO index was less than expected, showing that investors expect the decline in the equity markets to damage the real economy. This concludes our news for today. Thank you for viewing. We hope you'll be able to join us tomorrow for our next broadcast. Before we sign off, we would like to invite you to go to our website at www.succeedinforex.com. There you can find a link to our Yahoo forum, which is also Succeed in Forex. And also you will have information regarding our Traders Training Center. Have a great trading day, and we will see you tomorrow.